Hey everybody, this is Jim at SP500chart.com. It's about 2 o'clock in the afternoon here on Sunday, May 5th, 2013. We're going to take a look at what happened on Friday in the S&P and also take a look at the week in general as sort of a weekly review. And before we do so, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And please, make investment decisions that are suitable for your personal financial situation. Don't put money at risk you can't afford to lose. Because my experience has taught me if you invest money that you cannot afford to lose, you're gonna lose it in all likelihood because your emotions will work against your better interest. So, even though that sounds real smart and everything, I'm still not a licensed financial professional. I'm just a guy that draws lines on charts. Let's take a look. Okay, we're starting out looking at a 2-hour chart of the S&P. I usually don't use a 2-hour chart, and I'll tell you why. Because my lines tend to get a little screwy. I'm going to remove these moving averages. These lines tend to get a little screwy when we do the 2-hour thing. But I want you to see something. Because we've got to put what's been going on, I think, in context. And here's the context I want you to see. This rally has lasted since its beginning on November 17th of last year. We've been going now for 1, 2, 3, 4, 5 plus months of nothing but upward momentum. Now, we have a couple of lines that have defined the longer term aspect of this rally. We've had this resistance line that lasted, well, I mean, it's still working, but what I mean is that we had this resistance line that we were touching consistently for about 2.5 months. Not quite, almost a little over 2 months. Then we had this support line that has been holding, that held for for about, 4 months? Something like that. Then we started to see this break down a little bit, but we recovered. However, and this is the thing I just want you to see, and I'm not saying we're at a top, but what I am saying is, this is our resistance line that had we been in a really, really strong and healthy rally that stayed within these boundaries, even though the S&P is at an all-time high at 1614 and change, had we been bouncing along in this channel the entire time, the S&P could have been at 1665. But instead, we're about 50 points lower than that. So what I'm saying is, despite the news, despite the fact that the S&P is just moving on up, despite the fact that the S&P has even moved over that all-time 2000 and 2007 tops line, despite that, it looks like this channel that we started out in middle of November and continued in through much of 2013, almost all. It looks like this line is just out of reach for right now. So what I'm saying now, not saying we couldn't get on up there, but you can see that even with last Friday's move, it looks as if the highs are getting a little less high. Okay? Now let's take a look at a 30-minute chart. Couple things. Here's our all-time tops line. We came up, bounced back. Came up, looked like we were rounding over. Then the jobs report told everybody the economy's great. You know, By the way, let me share something about what's going on, I think, with these jobs numbers. I'll leave politics out of it. You can make up your own mind on the political wisdom or lack thereof. Obamacare is taking a lot of full-time jobs and converting them into three-quarters time jobs. As you know, Obamacare is only applicable to people who are working 30 hours a week or more. Many businesses that hire hourly wage earners, Darden Restaurant Group comes to mind. I believe Carmike, or is it Regal Cinemas? A lot of businesses that hire people on an hourly basis are telling these 40-hour workers that they are going to become 29-hour workers. Now, what does that do to the overall job market? Do those people jump off? I mean, do we lose them on the job roles? No. But what happens is, where you used to have 10 people doing 400 hours of work per week, now you've got 10 people doing 290 hours of work a week. You got to go hire 3 more people. So it's going to make unemployment go down. But it's not really creating any more wealth. So I think the market, as it's reading this, it's reading it old school. It's reading it, if you will be, it's a legacy reading where we're looking at this and we're going, wow, things are getting back to normal. No, they're not. People's wages are actually going to be going down because they're being turned from full-time workers to three-quarters time workers. So I just throw that in for you to factor into the reality of the situation. But I'll be the first to tell you that the stock market does not go up on reality, and it doesn't always go down on reality. It goes up and down on desire for gain and fear of loss. Right now, people are desiring gain. They can't go anywhere else with their money. They're not going to put it in a CD and get 0.0003% per year. They're not going to tie it up for 5 years so that can go up to 0.04. I'm making these numbers up, but you get the point. The markets are the only place that anyone can put money and stand a chance of making money. Unfortunately, eventually, this will turn back down. We need a breather. And the higher we go, the more we've got to go down for a breather. But I've been saying all along, watch this line. This could be creating a top. Folks, right now, I'm leaving this line on here, but I'm going to make it a lighter color because we're over that line now. We are not over it by a technically important amount. We're less than 1% over it, but we are over it. And I think that absolutely bears watching. Now, we've got a resistance line. If we look at the 1-hour chart and we look at the last series of 3 highs, here, here, and here, you can see that we are approaching that level, and that level could see the markets get up to about 1630 this week. Actually, could get up to 1630 almost on Monday, but certainly within range this week. That would not surprise me one bit. So, looking back at the week, in weekly review, I think one thing that we got right was don't do anything until we know it's a top. It looked like we may be forming a little head and shoulders right here, but I pointed out over on Thursday's video that we may also be dealing with a small sort of inverted head and shoulders, with this being the neckline, and if we were, we would be seeing a move to roughly 1615, 1616. If you don't believe me, go back and listen to it. As much as I didn't think the market wanted to get over this line, I had to point that out because it was there. And lo and behold, that is precisely what happened on Friday. So does that mean we forget this line? No, it doesn't. We keep this line on the chart. So right now, I think we probably would have mild support at 1600. I think we would have probably a little better support at 1585. I think we've got resistance around the high 1620s for Monday and getting into around 1630 on Wednesday. And it certainly is getting very interesting. We saw this little blue channel break Wednesday and Thursday, but then we recovered and got halfway back into that channel. Will it break again? I don't know. Let's keep an eye on it, see what happens. So guys, that's it. Right now, what we saw happen on a 3-minute chart, this is a little ambiguous up here. I can't tell if this looks like it wants to roll over or if we are potentially making a bull flag. Either one could be the case. With that in mind, let's keep these two little lines on our chart. You can watch these on the 3-minute live chart that I provide to all people who subscribe to my service. And what that means is I give you a link and you can watch in real time through the trades that take place on the BATS exchange. You can watch this chart update in real time. So if I say watch this bottom line here, if it breaks, then we're probably going to come down and test 1600. Well, you can know that in real time if you're a subscriber. Or watch this top line right here. If we break out over this, then expect a move to come on up to this darker blue line right here. So guys, there's your video for the week ending May 3rd, 2013. Thanks for watching. I want to thank my subscribers for your steadfast support. I want to welcome new subscribers, and I want to remind everybody, it doesn't always work, but we've been doing pretty darn good. And right now, even though I thought we might see a top around 1600, does that mean there's not going to be a top? No. It just means there's not going to be one at 1600. So we keep an eye on the chart. We will eventually see a topping pattern, and when we see it, we will probably have the same benefits of knowing what to expect as we've seen on about 3 or 4 occasions over the past 2.5 years. So thanks again for watching. Take care, and hey, it's only money. The most important thing in life is your relationships. So do something a week from now. I'm just reminding you folks that got mothers. Mother's Day is in a week. Take care of your moms. Take care.